Welcome to the Harmonic app's trading analysis, where I use Harmonic scanner to detect harmonic patterns and price action analysis to confirm trading idea. I want to show you what you can learn if you want and how to analyze the market. Feel free to ask any question in the comment section. And if you like the analysis, click the like button and subscribe. Let's start. Today we have a bad pattern that was detected on the Harmonic app scanner. Here it is. You can see I'm using a daily time frame, and it is bad pattern where it is completed 2 days ago. You can see here with the date when the pattern has been detected. I will show you how I have put the settings to detect the bad pattern on the daily time frame. Here, when you get to the Harmonic app scanner, you have 4 menus in the upper right corner. First one is chart, second one is monitor, third one is notification, and the fourth one is account. First is the chart, where you make the analysis of the pattern you want to have analyzed. Second one is monitor, where you put all the settings and also the filters to check which patterns you have detected and on which symbol. Then you have much more filters that you can put to analyze any other topic you want. For example, you can put here any filters you want for certain symbol. In the settings tab, you have much more about the patterns, the time frames, and also is it the bullish, bearish, or unknown. And then you have also here a view a default, which you can put a desired filter for certain symbol. In this case, I have Australian dollar on the 5-minute time frame. But in this case, I'm not using this filter, but I'm using default filter, where I have put other settings. The settings I have put is a complete. A complete patterns means the patterns are ready for analyzing and trading. When you put here the time frame, for example, in my case, I have put a D, which means the daily time frame. All the patterns for the certain symbol will be detected only on a daily time frame. You can see here in the column where it says time frame, everything is with D, which means daily time frame. You can select any other pattern that you want and also any other time frame you want, but in this case I'm using daily time frame. And then here in the asset class you can leave it all selected. If you want to analyze only a certain asset class, for example, you want to check only Forex, you can unselect all of them and then select only the one here as a Forex. But if you want to have all of them, just click here and they all will be selected. As soon as you change here the settings, the results will be visible below. So currently I have deselected all and there is nothing. Then if I check Forex, I will have only Forex symbols. If I put commodity, then there will be also commodity list here. If I want to have metal, the metal will be also listed below, bonds and indices. But in this case, I will leave everything selected. Then below here, I have which pattern I want to filter between all of these patterns. When you select all of them, you will have listed them all of them below with daily time frame, and they all are complete. If you have not checked the video about what means complete, please read it again and watch it again, because I'm explaining you what means complete, because the complete can be failed and also can be successful. I will not get into this topic right now, but I will show you what I have done to get the pattern. So here I will deselect all of them and I will leave only bad pattern. And below you have possibility to select only bullish, bearish or unknown. If I deselect all of them and select only bullish, you will see here in this column these arrows are all green. Green represents a bullish type. If I select bearish, you will have red ones. So I want to have all of them because I want to have bullish and bearish patterns. So Just to give you a quick overview, I have selected complete patterns, which means they can be traded and analyzed immediately. I want to have only daily time frame, which is visible here. I want to have all asset class, all symbols. And then I want to have only bat pattern, which has shown as the best, one of the best patterns. And then I want to have bullish and bearish. Now this is it. When I put it here, all the filters, now I have all symbols that are verified with these criteria, all these filters. So the last one is XPD with a USD, which means when I click on this, I get palladium on the daily time frame. Now you can see here, this is the pattern that has been created. Created was on the 21st August, and here it is. You can see the entry levels, which you can simply use and enter into the trading platform. In this case, this is a potential reversal zone. This represents an area where you could wait until the patterns reach this area and enter into the trade. The entry price can be from here, which is 1844, up to 1953. So it is up to you to decide which entry level you will use. But this is a simple version where you just wait to enter in this area and put the stop loss and also put the target 1 or 2, depends what you want. But there is also another case, and that another case is you make the analysis on this chart, and then based on that analysis you confirm, is the entry level here in this potential reversal zone okay or not? Maybe your analysis will show you that the best entry will be here, or the entry level can be already here. So for example, in this case I have the current price is 2013, so I can decide, will I enter at this level, or I will wait until the price returns back here in the potential reversal zone and then enter. In my case, I will make the analysis and I will check how the things are working right now for this pattern. Because when I look at this pattern, for example like this, it's not really clear picture for me where the pair could head in the next days or weeks, depends, because we are using daily time frame, and when you are using daily time frame you are trading for several days, maybe sometimes weeks, but sometimes your trade can last for 1 day. Everything depends about that symbol and the pattern and also the market you're trading right now. When you check this row, you have important data. One of the most important data is this risk to reward ratio. So this risk to reward ratio represents how many percent or pips you will use and how many you will gain. 3.84 represents when the price is here at this level. That means 1844. So if you enter into trade at this point and you put stop loss here, your stop loss, for example, if you put 1% as a stop loss, your stop loss, if it is reached, will give you a minus 1% of your trading account. But if you enter here and the trade goes in your direction and reaches target 2, which is 2162, you will have 3.84% in profit. How do you have that? For example, check this. If I take the calculator and take this one, just a minute, 1844.7958 minus 1761.9746. So just a minute, notepad, I will use this. So it is 82.82 pips. And when I take the difference from the entry to the target 2, this will be 2162.7424 minus 1844.7958. Okay, it is 317.9466. So if I divide this with 82.82, I get 3.839, which is 3.84. This is the risk to reward ratio if I enter the trade at this level and put the stop loss here and the take profit at target 2. So in my case, I will make the analysis for this daily time frame for the bad pattern on the palladium. To make that analysis, I will go here to the chart and find this one, palladium. Okay, I'll put here palladium and I'll select IC markets because this is my broker I am trading with, and then when I do that I get this chart. Have in mind that I have changed the background here to be white, and also the candles are white and black. The blacks are for the bearish and the white are for the bullish. Now at this chart on the daily time frame, the time frame you can change here in this menu. Just a minute. You can see all the patterns that are detected in a certain time. For example, I can see all the patterns on the daily time frame since March this year. So there are several patterns, but okay, I have received right now the Telegram message. I will close this one. Okay, here are the patterns, but I will use the bad pattern, which is the last one. Now you can see here, this is the bad pattern. This is the bad pattern, and here are the entry levels. Have in mind that these patterns can be different, created when you are using different brokers, because they are also using different time for these candles. So the candles can look different. For example, if I take on Oanda, you can see here that I have a large bearish candle and small bullish candle. If I put Oanda here, you can see what I have here. A pretty larger, I will close all the patterns, click here. Pretty larger and also small bearish candle. What you can see it's slightly different than the IC markets, because the IC markets are using a New York close time frame, and also Duand, I do not know which one it uses. So I like to use IC markets because it has a New York close time for the candles. Okay, I will remove all other patterns and I will leave only bad pattern. I will increase this one so it looks much better. Okay. One of the disadvantages on the white background is you cannot see here the levels, but you can change that by clicking the right mouse button, then format and change the text into black. And then you will see everything that is needed. If you hover over with your mouse button, sometimes on the gray area where the potential reversal zone is, you can see the numbers, but the best is to change this text into white. I will change that just to show you. Here you can see it. Now it's visible, everything you need. But I will make the analysis right now. It is technical analysis that I'm using with the support and resistance levels with the trend lines. And you will see how the picture will look after I put all levels I need. I will close all the patterns, so there is no levels here that will distract me. And I will close this also window, click it here. Now I'm ready. You can see how the picture looks like. Now we have some kind of downtrend, but this downtrend has been replaced with a small uptrend because we have lower highs and then we have a higher high again higher high, and again higher high. So this downtrend has been slightly changed from here at this level, and then we are now looking to go up. And we have a bullish pattern that is suggesting the price will move to the certain level. But I would like to verify that this market overview looks like to continue being bullish. Okay, let's start. The first step I'm doing is to make the support and resistance levels and the trend lines. First, I will make the trend line just to see where the trend is moving. Currently, I have here a downtrend. You can see it. And I will put here a one downtrend. I will connect this level with this one, and I will put on the below side, on the below from this downtrend, also this trend line. I will copy it and check it where it fits, and it fits nicely here. So we have one downtrend which has been broken to the upside. You can see it here. It has gone up and then it is returning down. So this looks like the breakout of this downtrend has been right now tested. It's being tested. It could be that it will be tested and continuing to moving up, which our daily bet pattern is suggesting, and there is also a possibility that this price will return back inside this downtrend. So let's continue. We have this downtrend, but you can see it here how the price is moving up. There is also a small uptrend which can be marked here. I will put the price one here. This is the one, and I will copy the same one, and I will see how this looks. Okay, here it is. I have put one low point, and here it is where the price could head when we have here a cross of one downtrend and one uptrend line. So this is some kind of confluence where the price could find some issues going down and maybe finding a support to go up. But this is the trend lines I have right now created. It is a helping tool that could help me decide where the price could move in the following days. Now it's time to put horizontal support and resistance lines. Okay. I'll put it as a red. I will change, I will right mouse. Okay, here it is already, settings, and I will change coordinates. Okay, I will put it as the smallest one. When I put here the smallest number, which is 1, this line will stretch to the left as much as possible. Okay. Okay, price, it will, okay, this is everything. Now I need to find where is the support. I will zoom in a little bit. And then, how do you find a support and resistance? Our first step is to find and to have in mind that there is a support when the price is going down. When the price is going down, for example, here the price was moving down, the price was moving down, and it has stopped at this level. It stopped at this level, and stopped at this level, and it stopped at this level, and so on and so on. And also there is a resistance when the price is moving up. For example, in this case, the price was moving up, and it has stopped here. Then again, it stopped here. So we have, for example, when the price was moving down, we have here a place where the price has stopped. Then we have a second place where the price has stopped. So this line will connect these two lows. Then when the price was moving down again, it has stopped here, slightly below. Then when the price was moving down, the price is stopped also close to this level. And then we have again, when the price was moving down, the price reached this level and again this level. So I will move this support level to be somewhere in between all these levels. For example, this is the highest level looking from this price level, and this is the lower level looking from this level. So the price has jumped around this support level, and this support level I will leave it like this. But in the future, if I see the price is bouncing most of the time, for example around this level, I will change this support level. Okay, and this support level, where I have put it right now, sometimes also the price respects when it moves up. For example, here it is, when the price was moving up, it has stopped. Then again, when the price was moving up, you can see this candle, it has returned back down, which means there is a resistance for this price. Then I do not have here the case when the price was moving up, but for example, if we go in the past, we will see what the price has done. I will click on this support line, then I will format, go to settings and select coordinates, again remove to the smallest number. I leave it here like 3. And you can see this support line has been respected also in the past. Then when the price was moving up, you can see close to this level, the price found resistance that rejected the price down. So you can see that even though this price most of the time respects as a support, we have sometimes this level is respected as a resistance when the price was moving up. So I will repeat the same process on the chart to make other support and resistance levels. I will check right now where the price was moving down again, and then see where is the resistance, where the price is stopping. So I have it here 1, I have it here at also 1, and then there is no more clear except this below. But you can see here when I put the support level here, just a minute. Okay, we have here also a respect of this line, horizontal line, as a resistance. So I will leave this support, this resistance line here, where it is touching these levels and also these levels. It is much more respectable a level than having it here. Now you can see when the price was moving up, it was respected as resistance, and now we have also here a resistance for the price. Then I will put another one. I will copy this one and move to the upside. Okay, this is also a nice level where the price was moving. You can look here. It was a support. Here was resistance. This was resistance again. Here is also the resistance, and here is also the support. To make the analysis here with this pair, I can put also a smaller resistance levels and support levels inside, just to have a better overview where the price could bounce up. If you take a look from here, from the left to the right, you can see here the price. I will leave this on the side. I will use this one. When the price was moving down, it has found here a support. Then when it was moving up, it has found here the support. But when looking at this, okay, I will slightly increase this one. When the price was moving down, the price has found here some kind of confluence of support and resistance. Here it is also, here it is also, here it is also, and here it is also, and the price has found issues here, then it was found here, then it was found here, it was found here, and here and here. So if I take all these levels, this means the price is having trouble around this level. Okay, and this level is much more respected when the price is moving up than down. For example, look at here. When it's going down, it's not respecting so much. When it's moving up, it is respecting. It has problems around this level. Then it would move, and when it was moving down, not so good. And then when moving up, yes, here it is again. Then we have here, here. Most of the time when the price is heading up, it has problems here. I will change a little bit this one. Okay, and when the price is moving down, it doesn't respect this price level as much as when it's moving up. So I will not put any more horizontal levels. Now it's time to put supply and demand zone. That means the area around these horizontal levels represents sometimes a supply or demand level. So I cannot put this horizontal level here and then again here, which represents the area where the price has bounced. For example, in this case, when the price was moving up, the price has bounced from this level to this level. You can see where the candles ends and where is the wick. So this area represents where the price could bounce when moving up or down. In this case, the price has reached this level, but most of the candles did not close above this level. So this is the area where is the supply zone, which means there are many sellers here in this area waiting for the price to be pushed down. In this case, when the price was heading up, you can see also here the price, the candle could not reach higher levels, but the wick has reached it. And also we have a strong bearish pin bar here and many other candles that could not reach higher levels. So I will mark this area, with rectangle, and I will put the lower side of this rectangle where the candles are ending. In this case, here is the candle end and here is the candle end. So this area from this horizontal level to the lower side represents a supply level. On the upper side, there is also an area where the price was reaching levels, and this you can see wicks on the upper side and also here the wicks. So I will leave this area, but I will just increase the area. I will put here the highest one, 15,000. And this is how you make a supply and demand zone. And then I will repeat the same process for all the support and resistance levels here. So here I will check where are the wicks. You can see it here. For example, here the wicks, and also you have here some kind of wicks. Do not put too much. You do not need to have it like this. It makes no sense. But put it where it makes sense. For example, these are the wicks, then here it is a wick, here is the wick, and here is the wick, here is the candle and wick. This is the lower side. And then on the upper side, also check where the candles ends, you can see it here, and put it like that. Then just increase it and put the highest number, and then repeat the same process for all others. I will put it here also. Just a minute. Okay, this is the lower side. On the higher side, this is okay also. Okay, this is much better picture. Now you can see how the price is heading down. Now it has changed the direction. It's going in to the upside. So I will go now and check the candles. How do they look? Okay, take a look here. What we right now have. We have an uptrend. The candles are heading with the uptrend, but the price has returning down, and now it is around this area. Now we have here a horizontal support level for this price, and we have also this downtrend line, which also now represents a support because the price was moving down. It has found support. This area where these two levels, this downtrend and horizontal support, are crossing, it is called confluence of support. So we have here also an uptrend which adds this area as a strong support and confluence of support where the three support levels are crossing. So this will represent for the price a high support level, which means we could see buyers pushing the price higher. We also have here a demand level where the price could find a strong demand zone where the bulls will try to push the price on the higher levels. And then check it here. When the price was moving down, in this case, for example, here's the start. This is the first time when the price was heading down. The price stopped here. In the second attempt, the price stopped here. Then in the third attempt, the price stopped here. Then again, when the price was heading down, the price stopped here, found some confluence of support. Then again, when the price was heading down, the price stopped here. Then again, when the price was going down, the price stopped here. So we have here this level, this horizontal support, that is not respected that good as it should have. If we take a look when the price is moving up, we can see slightly difference. When the price was heading up, the candles has reached this level, you can see many candles, and the price could not go above, could not close the daily candle above. In the second attempt, the price has reached also this area, which is now supply level, which means area where are the sellers. The price could not reach higher levels, but in this case, the breakout has happened, the price has returned back up, then returned back down. In the second attempt, the price again has reached this level, respected this level, could not break above, and then eventually broke outside from this resistance and gone to the next level. So this means this level is not so good for the price as a support when the price was moving down. It is much better respected when the price is heading up. So we are in this case when the price was heading down. So we can see the price did not respected this support as good as it should. There are much more better support levels than this one. So this is the first signal that this support is not so good for this price. So this is something that we need to have in mind where we are making a final decision. Will we trade this as a bullish opportunity? Now let's move forward. This is the area of the confluence of support. So this is another signal we have, but this signal is for the bulls. This confluence of support represents the place where the price will move up. So we have also here a bearish candle, which is a strong bearish candle, but it has stopped here. We should look for this level. This is the one where the candles, when they're moving down, could not close below this level. You can see here these two candles could not close below. We also have here when the price was heading down, it had problem closing below this level. So 1965, you can see it here, 1965 and also 1938, which is also the level here, is the level where the price should not close below. If the price closes below, this will represent the price is returning back down and the price will be heading here. If the price stays above this level, this will mean the price will find greater demand zone where the bulls could push the price higher. But to confirm that, we need to have some kind of price action signal at this level. It could be from 965 to 938, which I have said a few seconds ago. If we find it here, this will mean an entry level with a good risk to reward ratio to get to the higher levels. Now it's time to put a bat pattern here. Show. Now take a look here. I will put also the levels so we can see it. Take a look here. So the entry level for this bat pattern is around the same levels I have mentioned based on this analysis. So it is an area from here to here. It has much wider area for the entry, but the stop loss is below, almost below. It is below this level, but it's not below this level. So I would extend the stop loss to this here, 1760, instead having it here. So it is much better because this is the safer stop loss. Maybe the price will reach again this level and then return back up. So it is better to have the price below here. If the price reaches this lower level, this will mean all these levels have been broken, the price is continuing to moving down. But if that happens, you would make another analysis to see how the market looks. So based on this analysis, we can see here that the entry level potential reversal zone of this bat pattern is almost the same, the area where I have just mentioned based on this analysis. So this bat pattern is confirming the analysis, or you can say that this analysis is confirming this bat pattern that the price could head up. The first entry of the first profit target is this level, where the price has a level above these candles in the case when the price was heading up. So we are now looking for the price to move up to the upside. So we need to watch these candles when they were moving up to see where is the resistance, where the price could stop. In this case, when the price was moving up, this is also the higher level where the price has reached. So this is possible profit target 1. But if you are targeting profit target 1, then I would use this level, because this level, the price has reached certainly 100% in these attempts. In the second time, when the price was heading up, the price has reached this level also. So it is much better to have a profit target 1 here than instead here. But if the price reaches target 1, then you would move stop loss to be equal or slightly in profit, depending where the entry level. If the price returns back down, you will end up with small profit, instead waiting stop loss to be activated. Then second profit target is here. This, when the price was moving up, the price has reached this level. In the second attempt, the price has reached this level. So you can see when the price is heading up, this area is the certain area where the price will reach. Okay? When the price was moving down, it has bounced from this level, it reached to this level. So in this case, I will put target to certainly here, where the price has reached this level when it was moving up. So you can be sure you have much more chance to reach this level instead this level. But also the profit target 2 is below this resistance level. It is also inside this supply zone, at the start of the supply zone. This profit target is, if the target 1 is reached and break out to the upside, it is certainly this target 2 will be reached. It depends about the time when it will be reached. But this is never 100% sure. The market cannot do what do you say. You need to follow the market. So you need to stay tuned with this analysis and check what the market will do in the following days. Maybe the market completely changes the bias and completely goes against this analysis and also against this pattern. So that is why you have a stop loss with 1% or less, or everything else that you want, to be sure to protect your account if the price goes against you. But if the price goes in your favor, you will make 3.85% or 3% depending where do you enter into this trade. So in this case, I will wait until price returns back down, make some kind of price action signal which represents a bullish price action signal, and then enter the trade. I will inform you in the Facebook group, so you can follow me there and see what is the final status. But if you enter here at this level, you will have much worse risk to reward ratio, because if you enter here, put stop loss here, you will have stop loss to risk to reward ratio which is less than 1, which is not a good entry. So if you have any question, feel free to ask in the Facebook group. I wish you happy trading and see you next time. I hope you liked the analysis. If you want to get more analysis, click the like button and subscribe. See you next time and happy trading.